Welcome back to my YouTube channel, everyone. My name is Saman Habibi and I'm a real estate agent here in the Greater Toronto Area, focusing on the Durham region and the GTA. On this YouTube channel, I do my best to give everyone an update as to what's going on with the real estate market and kind of give you my views on what's going to happen in the coming months. In this video, we're going to be doing a 2023 recap of what happened in the real estate market and trying to, have an outlook into 2024. As always, if you can like and subscribe to the channel, that would be greatly appreciated. It would help others also see this video and get some valuable information. So let's talk about what happened in 2023. 2023, we began the year very slow in January. The median price in the Greater Toronto Area for all types of homes was around $900,000. We began the year with one interest rate hike in January and then a consecutive pause in the interest rate announcement or interest rate increase. And that, as a result, that signal from the Bank of Canada that we are going to pause interest rates really gave buyers confidence as to what they can expect in the market. And as a result, I think two things happened. You had buyer confidence and you just had seasonality of, essentially in the spring market, this is when real estate market starts to pick up. So the combination of a signal from the Bank of Canada giving buyers confidence to go out and shop and the seasonality factor really started to increase real estate prices. And from January till around May of 2023, June of 2023, we saw an increase of approximately 15% in real estate prices increasing across the board in the GTA. So January 1, we started the year at $900,000, and then by May, June, the median price was around $1,035,000. So that was a 15% increase. Now, essentially what happened right after then, we saw the confidence in the market. The Bank of Canada kind of panicked and said, this is not what is supposed to be happening in the market. They came ahead, went aggressive, and they had two interest rate announcements and two interest rate hikes in June and July of 2023. That essentially eliminated the buyer confidence. And again, eliminating buyer confidence with a bit of seasonality with the summer months being slow. All the gains that we had in 2023, that 15% gain that we had in the market was pretty much eliminated, and we had a pullback in prices of around 12%. So if you take a look at the full year, we had prices go up 15%, come down another 12% by year end. So essentially, if you bought a house in January of 2023, by December of 2023, you were pretty much at a break even or at a standstill. Prices went up, came down, but if we zoom out, they kind of stayed, fairly stable, which is not bad because, we are in a turmoil year of what's happening in the economy, specifically in the Canadian economy. So, it is expected to see this. So there's a lot of volatility, there's a lot of ups and downs, but it's part of the market. I know that in Canada, we've been conditioned to see, continuous increases in real estate prices. And, that's essentially been, it's been feeding a lot of people in terms of equity growth, in terms of net worth growth. But those were not normal times. And I think we are also not in normal times right now with what's going on in the world. But, we do need a bit more of a realistic approach to real estate. We can't be having, 10, 15, 20% growth year over year. It's just not sustainable, especially when incomes are not increasing in the same pattern. The other thing that happened in 2023 that is really worth talking about is the closing of pre-construction projects, or these condominium projects that were purchased 2-3 years ago and were coming to completion in 2023. What we saw was that value that people had purchased these pre-construction projects for were not appraising at the value at the date of closing. So for example, you buy a pre-construction project, typically it takes 2 to 3 years to finish. So in the example of what we saw, people had purchased these projects at the peak of the market in 2021, 2022, and some of these projects are now coming to completion. So people purchased them at a peak, and now today, since the real estate market has corrected 20-25%, they're closing at a value which is much lower. And as a result, the bank is giving you a mortgage on the lower amount or on the current market value. And as a result, there's a gap here in prices. So what's happening is that people are at a shortfall for this gap and they can't figure out how to bridge this gap together. Typically, you have to bridge the gap with cash or some sort of financing ability, because at the end of the day, you purchased it for X, but the bank is saying it's worth Y. and you have to bridge the gap. So essentially, a lot of people were saying, we're caught in a very unfavorable situation. Some people were walking away from their deposits and saying, giving the unit back to the builder and asking the builder to sell it. Some people were trying to assign their contract to another person, and as a result, taking a loss on the projects. I saw a lot of this happening. There's a lot of headlines of people walking away from $100,000, $200,000, $300,000 deposits, which is very devastating to hear, because living in Canada, we really understand how hard it is to save $100,000, $200,000, $300,000, in any given time. So that was another trend that I saw in 2023, which was not good to see, because when you take a look at what people are purchasing from a pre-construction project, a lot of these projects just don't make sense for anyone who is looking to speculate. So if you're buying a pre-construction project with the hopes of either selling the project for a profit or assigning your contract for a profit, that thesis, that business plan just never made sense. It was pure speculation. And unfortunately, some people just bought into the hype and got caught in these scenarios. And it was just a sad reality that a lot of people had to face. Now let's talk about 2024 and what we can expect to see in 2024. I've used this analogy that it's not a full red light stop, and it's not a, green light, steam ahead, get bullish with real estate. It's somewhere in the middle, and that middle is a very cautious ground. You need to be very cautious with what you're doing. Your moves in real estate have to be intentional, and they need to have purpose, and they have to be long term. You can't be buying projects or buying real estate right now and having a short-term sight. You can't be buying and speculating to make a move in 2 to 3 years. In my opinion, right now, anything that you purchase in the Greater Toronto area, in the Durham region, if it's for your principal residence, I think you need to have a minimum 5-year horizon. If it's a investment property or it's an investment move that you're making, you need to have long-term visions, and you need to understand that cash flow may be an issue in the short term. So what does 2024 look like when it comes to the real estate landscape? I've used the analogy that it's not a full, red light stop, and it's not a green light to go ahead. It's somewhere in the middle to play cautious and really know what you're dealing with. Let's talk about interest rates, because it's fair to assume that when interest rates started, increasing in 2022, it had a very strong impact on real estate prices. So it's fair to assume that if interest rates were to come down, it would also have an impact on real estate prices in terms of prices moving upwards. Now, with interest rates in Canada, the most common products are the fixed rate interest rates and the variable rate interest rates. So when it comes to the fixed rate interest rates, this is really controlled by the bond market. And we know that there has been signals from the Federal Reserve in the US that there are going to be rate cuts in the US. And if these headlines are true, that will likely resonate with Canada, and Canada will likely follow suit as well and reduce the bond rate, which would, as a result, have an impact on the fixed rate product. So because this is the signal that's already out there in the market, we are already seeing a reflection of that when it comes to the 3 or 5 year fixed mortgage product. So because that information is known, it is already being baked into the fixed rate term. So the fixed rate product today reflects what can potentially happen in the future, and as a result, those rates are lower. So if people are shopping out there looking to buy a home, they know what the fixed rate is, and that fixed rate accounts for future rate cuts that may happen. And this, the fixed rate product is slightly cheaper than the variable rate right now, but that's because the variable rate is controlled by the announcements that the Bank of Canada makes. So if we talk about the second product, the variable rate interest product, this is a product that is higher right now than the fixed rate product, and that's because in order for the variable mortgage to come down, we really need the Bank of Canada to start making those cuts. And as a result, once those cuts are made, then the variable interest rate will come down. Right now, that variable product is around 1 to 1.5 to 2% higher than that fixed product. So a lot of people right now are taking on the variable mortgage because there is that signal, there's that announcement, there's that headline that there are going to be 2 to 4 interest rate cuts coming in 2024. And if that was to happen, if those 2 to 4 interest rate cuts do happen, then we will see that variable rate drop, likely below the fixed rate product as well. Now, both of these announcements, both of these decisions that have an impact on the fixed rate and the variable rate will have an impact on real estate prices. Fixed rates coming down essentially give people the confidence. Variable rates coming down give people the confidence to go out there and, if there is a requirement or a need to purchase real estate, it gives them the confidence to go ahead and do so, because we know that, or they're signaling that these rates are going to come down, and as a result, give people the affordability and the buying power that they need to get into the real estate market. I would also caution people to, be mindful of the news and headlines that they hear and they listen. I'm noticing that there's a lot of confirmation bias with the news that is being put out there, whether that news is coming from realtors, mortgage brokers, the media. There's often a narrative that they are trying to portray and push out to the media, whereas the consumer is looking for an unbiased opinion. There's going to be a lot of news and headlines coming out because of the fact that we have an election year in the US, and that is going to have a ripple effect into Canada in terms of the information coming down here. With that said, I would say if you have a renewal coming up, make sure that you take a very conservative approach. Don't be speculating on what is going to happen, in the near future. You want to make a decision today that is going to reduce your risk for the next 2 to 5 years. I know that that's a long time horizon, but we are living in a very uncertain time right now. There's a lot of world events happening that could have an impact on a lot of commodities, and as a result causing inflation. So I know that we're trying to speak housing related, but there's a lot going on in the world that we need to be mindful of. So when it comes to making a decision that has to do with your home, whether it's a mortgage or a purchase, make sure that you always consult with a professional and someone who you can trust, and someone who has an unbiased opinion. So the $1 million question, of course, is do I anticipate prices going up in 2024, or do I see it coming down? Long story short, I don't see a material increase in price when it comes to the GTA real estate market. And that's because, we got to consider supply and demand. We hear this term a lot, but what does supply and demand mean in terms of housing? Well, we know that demand is the ability to essentially go out and purchase a home. The story has been that in Canada, demand is very high because of immigration and the mass immigration that is coming in. Although that is true, we have to consider the immigrants coming in. What is the likelihood of them going out and purchasing a home? Well, in order to do that, you would need good income, you would need good credit, and you would need a substantial amount of savings to be able to go out and purchase a home here in the GTA. Now, we hear countless, number of reports and media talking about how hard it is for immigrants to essentially come to Canada and get on their feet and get a job, a high-paying job, and to be able to sustain the living lifestyle that we have here in Canada, because it's been such an inflationary country. And unfortunately, yes, there are immigrants coming in, but I just don't think that these immigrants are in a situation to be able to have those three things that I spoke about: a good and high-paying job, good credit, and a substantial amount of savings to go out and purchase these properties. So we also have to consider the supply side of the equation. When it comes to supply, we have to consider new homes that are going to be built from a pre-construction perspective coming to the market, and also resale homes that are coming to the market as well. So we know that on the pre-construction side, there are pre-construction projects happening right now. You probably see it driving around. These projects are going to come to an end, and they're going to add to the supply of homes in the market. And we are also going to see some of these people who are up for renewals, the quote-unquote resale homes. These individuals coming up for renewals are just going to find the cost of keeping this property too expensive, and as a result, a portion of these properties is also going to come to the market as well. So this is going to bring more supply to the market, and perhaps the demand that is there can gobble up the supply that is going to be provided. But in addition to that, we know that the federal government also announced a restriction on short-term rentals. So any short-term rentals that are operating right now in restricted areas will no longer be able to deduct any expenses that they have, and as a result, they will likely have to pay tax on the total revenue that they have generated. Which from a investment perspective, this is not good, because you're going to be taxed at a higher rate for all the revenue that you bring in. It's safe to assume that a percentage of these Airbnb holders are likely going to say this no longer has a business plan that works for me, and as a result, I don't want to deal with this. I don't want to deal with the tax burden, and that supply is either going to be sold or it's going to come to the market as long-term rentals. So when I look at the supply and demand, I think that the demand conversation that we have is a weak conversation because we're depending on these new immigrants who are trying to get up on their feet and get going with life in Canada. We're depending on those individuals to come in and purchase inflated assets with very restricted or very strict lending rules, but we're also seeing supply come to the market as well. So we talk about supply and demand, but if we also layer the income conversation on top of that, the fact that income levels have not risen as much as house prices have increased, in my opinion, we're going to have an issue of these prices, real estate prices, not increasing materially in 2024. Thank you guys for tuning into another video. I hope you found some valuable information in this video. If you can please like and subscribe to the channel, that would be greatly appreciated. It will allow others to see this video as well and get some valuable information that they can use. And if you have any questions, feel free to scan my QR code here where you can book a one-on-one call with me and we can talk about your personal scenario.